Hello, dear traders. This is Petko Alexander from EA Forex Academy, and I continue now with the never losing formula that I have calculated for the Bitcoin, actually, for one of my previous courses, but we will apply it here as well instead of using stop loss for our strategy. So, since the Bitcoin is very volatile asset, it's moving really quick. It doesn't stay in a range. I will show you this lecture from the previous course where I am showing the never losing formula, and this is one very unique tool that you can use in order to always end up on a profit, or worst case scenario, to exit from every trade with zero or break even. Break even means that you're trading, but at the end of the day, you go out with zero. And this is, of course, much better than having loss. I hope you enjoy the lecture and just make sure to practice it, and I will continue straight away after that. Hello, dear traders. I continue now with the best lecture I can say in this course, and for me probably that would be one of the best lectures I'll ever record, because I will show you the never losing formula that I came up for the Bitcoin. Guys, to make it clear, this was a long time invented for the currencies, but since the currencies have changed so much with the algorithmic trading recent years, it is very hard to use this formula on the normal forex market. But for the Bitcoin, I have came up with this formula after long sleepless or insomnia hours, I can say, to calculate it and to put it in this course and to actually implement into the Bitcoin. I will show it to you now, and I proudly say that this is actually a life-changing game. This is a life changer formula, because the big question is, we place this buy stop over here, but at this moment, guys, when I'm placing this buy stop, the only thing I have the counter trend line, and I know that the Bitcoin is extremely rising, it's going up. There is nothing else I know at this moment, and the only thing is I can hope that it will actually hit my take profit over here, right? But many years ago I've learned not to hope, not to believe, and not to expect to happen what I want to happen. So I base my trading nowadays only on algorithmic trading, backtesting, and actually formulas mathematically proving that I will be on the profitable side. There is nothing else, guys. No hope, no belief. So at this moment, I am not hoping that actually my price will hit the take profit. Of course, I want to happen, but at this moment, there is a huge possibility at this moment over here that the price will reverse and it will put me on a loss. So what I do, guys, I place another target on the short side. So I will put it a green as well because it's a target, and I will put a horizontal line properties at the price of 3,730, and this is my target. So I have my entry here, I have my initial take profit, and here down I have another target, guys. I don't know which one will be hit first, but I know something for 100% certainty. At the current moment in the future, the price will hit either this target or either this target. And I know one thing for certainty as well, that it will not happen in the same time, right? I will show you now, and I will prove you mathematically with not so hard mathematical calculations that whichever target gets hit first, I will be on profit, or the worst case scenario, I will be on break even, on zero. So let's start now. What we have is a buy stop we set at the $4,010, and we have a take profit of 4,220. So I hope here you can see it. What happens? We enter here and our take profit is here. And if I open the specification of the Bitcoin, guys, you can see here that we have one more cost. This is the long and the short swap. So the swap is basically the cost that we pay to switch the position to the next day, to transfer it for the next day. So with the Bitcoin, you can see no matter we are in a long or in a short position, we will be paying this swap. That's why I choose $210 because I don't know how long time my trade will last. Maybe it will be one day, maybe it will be 2-3 days. Normally should not be more than a week because, as we said, the Bitcoin is very volatile and it doesn't stay in a range for a long time. But if it stays for a couple of days, I want my pure profit. That's why I call it pure profit. I want that I will have $200 as a pure profit after paying the spread and after actually paying the swap. And you should keep in mind one thing, guys, as well. This 3 days swap here is on Friday. Some brokers do it actually on Wednesday, which is really surprising, and sometimes you see some negative on your balance and you wonder why is that, and this is because of the swaps. So you pay as well 3 days swap on Friday, so you pay for Friday, Saturday and Sunday. Even the markets are closed, you are still paying the swap to the broker, and this is very normal. We cannot actually skip that or go without it. You don't pay swap if you are really short-term trader. If you're scalping and you open the trade during the day, it close it. But sometimes with some systems your trade will be left for the next day. That's why we need to pay the swap. So one more time, that's why I have choose $210 as a distance, as a take profit, because I want this $10 extra to cover my swap. Even sometimes the swap will be 4, 5, $6 totally from the trade, but total pure profit I will have at least $200. Okay, and here you can see some other details for the trading asset that you choose, and the specification. Actually you can have it right button and you click on specification. Okay, and here are all the details. And also you should keep always on mind that on the chart you see the bid price, but when you open a position you open it on the ask price and you close the position on the bid. So we always pay the spread to the broker. This is inevitable. We cannot really do it without it. So just keep in mind that when you open the position, for example, in this case, the spread is floating here in the specification, but for this broker is very stable to $10. So when I open the position, I'm immediately on negative of 10 because I see on the chart the bid price, but actually my position was opened on the ask price. Hope that's clear. So the first case that is possible to happen is that we will have 200 of pure profit, right? So let me put it down. What we will have is $210 of profit minus $10 of swap. So totally we will be having over here $200 of profit, right? Let me put it just a little bit bigger, guys, so you can see that. I'll put it to 16. Let's put it any color. Green we have. Okay, so it's green. We have $200 and 10 minus 10, and here we have our take profit. We are out, we are happy. But what will happen if the price will reverse and go down? At the price of 3,940, okay, I will put it again exactly, so 3,940, I will put it in a red color because this is a sell position. At this level of 3,940, I will open a short position with a lot of 1.4. So let's place one arrow down. So what we say is that we actually go 1.4 lot short. So simply I will sell the Bitcoin. I will try to explain as clean as possible because this is very, very important, guys, for your trading. So we have 1.4 lots. Let me put it as well in red because it's a sell. Okay, so here at this moment, if the price reverses and goes down at the level of 3,940, I will be placing actually a sell stop, and now my stop loss for this position will be the level of 4,220, and my stop loss for this position, the long one in the beginning, so let me put also one arrow up to make sure where we are entering into the trade, and let me make it green, so I hope this way it will be clear. And also here I will put the lots, so I am sure that you understand what we are talking about. And here also we are green. Okay, so we have one lot here going up, and here is our take profit of this level of 4,220, $210 higher. And if the price reverses $70 lower, stay with me, guys, $70 lower, this is 1/3 of the distance of the take profit. Okay, take profit 210, and my sell is just $70 lower. Okay, I'm opening a position of 1.4 lots. So the next thing that can happen is actually the price hits this target. And guess what will happen then? I will be negative $280. Let me put it in. I will be negative of $280 from the first trade, and as well I will be positive with $294 with the second trade, right? The short trade with 1.4 lots. And of course, I will be paying as well $14 of swap. So for every lot traded, I am adding $10 of swap as a cost. As I explained to you, probably it will be lower. With most of the cases, it will be much more lower, but this way I am having more pessimistic way of calculating. So I prefer to put as a cost $10 and to have actually an extra dollars as profit left instead of the opposite case. So now when I am having 1.4, I am putting $14 cost for the swap, but again I say it will be most of the cases lower. So if the price hits the target at 3073, my stop loss for the first trade will be hit, and I will be negative of $280. But the sell position of 1.4 will be on take profit of 294. And these are simple calculations, guys. 1.4 lot times 210 is 294. And of course, for 1.4 lot, we will be paying $14 of swap. And what we have, I think we don't need to calculate it, negative $280 plus $294 minus $14, we will be zero, break even. We will be out of the whole equation without any losses, even the price didn't go the way we want. And of course, I'm sure into your mind now is what happens if the price continues higher. So if we enter here, the price goes lower, we enter 1.4 lot, and then it continues to go higher. At this same level of 4010, guys, I will enter one more time with one lot on the long side. So basically I will buy one more lot. Okay, so totally I will be having two lots long, and I will have 1.4 short. And what will happen if the price hits the target of 4,220? I will put it down over here. What we will have, guys, is we will have this 210 minus 10 from the first entry over here, and then we will have the loss of 1.4 because this short entry will have the stop loss of 4,220 and it will be close. So what we will have over there is negative of $392 plus another $210 from the second lot that we bought minus another $10. So let me show it to you with the calculator as well. So I will place it over here. So we have one lot up and then we have the negative of 1.4. So we have 1.4 times 280, right? So this is 392 and then we have plus 210 minus $10. So totally what we will have is 210 minus 10 minus 392 plus 210 minus 10. Okay, so what we have at the end, guys, is $8 of profit. So what I am doing right now, I am building this middle section, which actually is my trigger section with two lines where I am buying and selling. I have the middle section, which is equal to $70 of distance. This is the distance between the upper line and the lower line. The upper when we are buying, the lower when we are selling. After that, it's very possible that the price as well will go lower. And then what I will do, I will sell again at this level over here. Let me make it red because it's a sell. Okay, so what I have, it's another sell of again 1.4 lots right over here, red again, and then totally, guys, we have 1.4 lots, 1.4 short, so totally we have 2.8. And the result, if the price hits the target of 3,730, will be total of negative 280 plus 294 minus 214, and then from this long trade over here I will have again another negative of 280, and then I will have a positive of 294 again, and another $14 of swap. So totally you can do the calculation again. Without the calculator, I believe this is 0. So again, if the price hits my target over here, I will be out of the whole trade without any losses. And again, if the price continues higher and it breaks 4,010, I will open a new buy position, but this time my lot needs to be higher. So what I will enter with, I will enter with 1.95 lots. It's 1.95, and you will see why. So totally here, when the price breaks 4,220, we will have negative of this 1.4. So this will be minus another 392 plus what we will have of 1.95 will be 1.95 times 210, total of 409.5. So it is 409.5, and this is in dollars. Let me put the dollar mark over here. And we have as well swap rate of $19.50. So here is the dollar again. So totally here we will have 210 minus 10 minus 392 plus 210 minus 10 what we have is $8, and then what we have is minus 392 plus 409.5 minus 19.5. So all we have is $6 left. We will be again on profit. And this is how it goes, guys. This is how you can actually never end up on loss. And you will not have a problem with the margin because you're having long and short positions and they're very close to each other. So what we have is simple, and what we have is something that really works fantastic with the Bitcoin, guys, because in our experience so far with the Bitcoin, we didn't see a case where the price is staying in such a range more than 2-3 times. Most of the time, the price will hit your take profit, but if it doesn't, you have your second take profit over here, you have this fantastic formula that will protect you from loss. And whatever happens, and once again, with a certainty, you should know that the price will hit sooner or later one of the two take profits. And just for your information, with further calculation over here, if by some chance it happens that you will need to go again lower, you need to go down here with lots of 2.75. So let me put it down so you can have it in mind. But I will really appreciate if you sit down, take a pen and a paper and write down the whole formula and calculate it for yourself. Because this formula, guys, can be modified the way that you want. I have chosen this take profit because first of all, I am very happy if I have $200 of profit, and second of all, because I have made a lot of research, as I told you, and I saw that actually we don't have the case where the price for the Bitcoin will stay so long time sideways. And this is actually the problem that comes if you trade this on the forex market. The price can stay in a range for so long. But look at the chart of the Bitcoin, guys. It doesn't stay in such range. And of course, if you use the powerful tool of counter trend line and the important support and resistance lines that I show you, more than 50% of the time I can tell you that with certainty you will hit your take profit from the first shot, just like what have happened in this example. But right here I'm just showing you what you need to do if the price goes against the trend and what lots you need to open, how you need to calculate it, and simply said what you need to do to change your trading and never ever ever have a stop loss again to eat your capital. What I suggest you is to write down the formula, do the calculations for yourself on a white piece of paper, and you can start practicing. Even you enter, guys, somewhere and you will place your take profit and you will create your middle section, you will end up always on a profit, a small profit, 6 to 8 or more dollars, or worst case scenario, you will end up with zero, break even. And this is fantastic, guys. We don't need to put a stop loss because simply you can see now that it's not needed. For one of my other course, I had this criticism from some of the students that I'm using actually expert advisors without stop loss. And yes, I do, because if the price goes against me, I can always calculate how to create my middle section and how to have my take profit. So in this way, guys, I don't know if you realize what I'm telling you here, but in this way, you can always exit from a negative trade with zero. I'm really so excited to tell this, and I really hope that more people will see this, because this is something that will change your trading. You can exit out of any negative trade, and actually you will never ever need to put a stop loss again. Thank you guys. Bye. So pretty much that's about it. Another hard thing, you need to practice it, and it's not really a hard thing. Just learn how to calculate it, and we will use it here. So simply, I will show you in the next lecture is the strategy that we will be using. You will receive as well the robot for this strategy, and I will show you how to combine this strategy with the robot with the never losing system. So instead of staying in front of the computer to wait when to enter into the trade, you will use the robot in order to open the trade for you, and once the trade is opened, you will have your take profit and you will have the sell stop for the never losing formula. So this is the way that we are trading semi-automatically. So it's not fully automatically, it's not manually, but it's semi-automated system, because trade is opened by the robot. After that, with control by protecting with the never losing system. Thank you guys for watching, and I really hope that you enjoyed this lecture. Cheers, bye.